want you to imagine that you're taking the CPA exam and your first question is to calculate net income given the following information: facts and figures, an income tax rate, and there'll be 4 answer choices. One of them will be correct. What would you do? Could you recognize, attack, and move on in the time period? Or would you be still thinking about this question halfway through the exam? So we want net income. They give us sales. They give us cost of goods sold, both of which are relevant. What about selling and administrative expenses? Sure, we're going to start with sales, we're going to subtract cost of goods sold, and then selling and administrative expenses. So we're well on our way. But what about some of these other items? Adjustment for prior year understatement of interest expense. Would that $60,000 appear on the current year income statement? No, because that's a prior period adjustment. It'll impact the opening retained earnings balance on the balance sheet. It will not appear on this income statement. Ignore the $60,000. What about gain on sale of available for sale debt securities? Okay, so available for sale debt securities were sold. This is a realized gain. Realized gains are on the income statement, even for available for sale debt securities. Now, if it was unrealized gains on available for sale debt, then it might go to OCI and not the income statement. But this is a gain on sale. So this gain of $8,000 has been realized. This gain of $8,000 will be recognized on the income statement. So add $8,000. Now we have gain on disposal of a discontinued business segment. Okay, well, discontinued operations, does that go on the income statement? Is that going to be part of our net income figure? Yes, it will. So that's going to be relevant also. And now how about this last one? Unrealized holding gain on available for sale debt securities. So now we have available for sale debt securities that have gone up in value. Does that increase in value show up on the income statement? No, it shows up in OCI. With a 21% tax rate, let's go to work and figure out the bottom line net income, because that's what they're asking for in this question. So net sales are $3,005,000, subtract cost of goods sold of $1,002,000. That's going to give you gross profit of $2,300,000, but that's not net income, of course, but that's a very important figure on an income statement, gross profit. Subtract selling and administrative expenses of $500,000, and we get $1,008,000 of operating income. But operating income is not net income, but we're on our way. So $1,008,000 so far, and you should be pretty comfortable with that. Nothing fancy so far, right? Okay, now we have this realized gain on available for sale debt, $8,000. We said the available for sale debt, those securities were sold, resulting in an $8,000 realized gain. We're going to recognize that gain on the income statement, but in a non-operating income section. So all we had to do so far was to know that that $8,000 belongs in the net income figure. And we're up to $1,808,000 of income from continuing operations before tax. Then we take that $1,808,000, we multiply by the tax rate given at 21%, and there's our provision for income tax, $379,680. And what results is income from continuing operations of $1,428,320. And that would be the net income figure if there was no discontinued operations. But we have a discontinued operation of $4,000. And here's where you'd have to remember your discontinued operations rules are shown net of tax. So $3,160 instead of $4,000 would be added to the income from continuing operations. And that would give you a total net income of $1,431,480. And then when you see your 4 choices, you'll be very happy to see that one of those choices says $1,431,480. Letter A is the correct answer. But Darius, what about these other items? We didn't do anything with the unrealized holding gain, non-credit related, they say, on available for sale debt securities. So that $7,000 goes on OCI, not on the income statement. What if it was credit related? Well, if it was credit related, then we would have included it as part of net income, because then at some point in the past, the $7,000 would have been recognized as a credit loss on the income statement, but they're saying that didn't happen. This is non-credit related, so go back to the general rule for available for sale debt securities, which means OCI, not the income statement, unless, of course, there was a sale of available for sale debt securities, which happened here, and that's why the $8,000 was included in our income statement. But the unrealized holding gain, that will go to OCI. And then the adjustment for prior year understatement of interest expense, the $60,000, that's going to impact beginning retained earnings and not have anything to do with the income statement. So if you see a question just like this on your exam, would you recognize, be able to attack it, and move on in the time period allowed? Or would you still be wondering about this question halfway through your test?